Hello and welcome back to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the @JR Mining guy over on X, and together with our good friend Brien Lundin, I'm the host of the Gold Newsletter channel. And I'm really looking forward to the upcoming discussion because we are inviting back Brad Rourke. He's the president and CEO over at Scottie Resources, and we haven't talked to Scottie in a while. And they were busy over at their project in the Golden Triangle in British Columbia, and we're going to catch up on their drill program. They just completed 10,000 meters, put out results last week, and we're going to also talk about strategic, what do you call it? Opportunities, silver linings. Let's call them that. And I'm really excited to have Brad on. If you haven't done so, hit that like and subscribe button. It helps us out tremendously. Reach a wider audience and share our stories and our company's interviews with a wider audience. Thank you so much. Now, without much further ado, Brad, it is great to have you back on the program. Thank you so much for joining me. Good to see you.
Yeah, good to see you, Kai. Always good to see you.
Yeah, Brett, we got to catch up. I think we've spoken before the summer and before you started drilling. I think it's almost like 6 months. I haven't checked the exact date, but we need to catch up, of course, on your summer program. Tell us a bit about it, like 10,000 meters drilled. How did the summer go, Brad?
Sure. So we did a different approach this year for 2024 drill season. In the past, I said every dollar we have is drill. And this year we came into the year with perhaps a little bit more money than we normally had. And we just took a dollar amount and we said, that's what we're spending. We feel we've already found something. And so we're trying to manage the money. So we just took a budget and saw how many meters we could get with that. And it ended up being 10,000. If anyone wants to go back 4, 5, 6 months ago, I was kind of saying 6,000, 7,000 meters because I wasn't sure what happened. So I had a dollar amount to spend. We just didn't have any big hiccups or you can lose holes. Like it can get precarious drilling holes. So we're happy that, we had a great season, 10,000 meters with a $4.5 million budget. And that includes all our geophysics and everything. So we're happy. I wish I did 20 now, but I am happy that, we've got a pretty strong treasury. I'm coming out of a season with more money than I've ever had going into a season. So I suppose that's a positive thing from our point of view, is that we're not hat in hand having to raise money right now, and we can be a little bit pickier and choosier. But nobody got hurt. We got through our program. It's we weren't wildcatting and doing big step outs anymore. We're really just trying to focus on getting an MRE. That's the next logical step for us. And we're probably end of Q1, beginning of Q2 is when we could expect that. And we're excited, or we kind of know what we have, and so does everybody else. But, we'll get that out. It's not the actual MRE that I'm interested in. It's the economics. And I can't talk about the economics of potential ore, because it's not even ore yet, because I don't have the MRE out. But we're feeling pretty confident. And really what I want to talk about is how little drilling it took us to get to this number that we'll come out with. And we're targeting 1 million ounces. And we're only months away from seeing whether I achieve that. And I really don't care if it's 900 or 1.1, that's all great. It's really going to much be 50,000 meters of total drilling, which I think is impressive. And because we have mills on either side of us, we're at ore in 2 phases already, right from where we are. So the economics of those ounces could be very eye-popping to people, I think. That's what we're hoping.
No, fantastic. 10,000 meters. Let's break it down real quick. How much of that was like infill drilling, and how much was more exploratory drilling there, Brad?
Well, I'm going to get it a little bit wrong. It's better for Thomas, but let's go 33% at Blueberry, which would be, I don't know if you call it infill yet, because we're going to get to inferred, I think. And maybe a little M&I. Again, I don't know. It's the resources modelers have that. So let's just say I did 30% of my meters at Blueberry, which is really what we've been doing 80% of our drilling for the last 2 years. It's not because we don't like it. It's just because we're preserving dollars. And then I did about 15 holes or 3,000 meters at Scottie Gold. So that's the most I've ever done at Scottie. But the purpose of that was in the past, there was a 700 drill hole database for when Scottie produce that half ounce per ton, but there was no core. So I needed to do confirmation holes, because it's our belief that there'll be a big portion of that MRE, maybe 25% is just going to come out of Scottie, with only 14 or 15 holes. So I think that's good for us, and it'll be a little bit higher grade and da. So we're excited about that. So about a third there, and then a third new targets, which we haven't done. We got C and D, which is kind of new for us, and we drilled in around there, but we have the Golden Belt Buckle and some new zones, and we're waiting to see. I don't have those back yet, but we did kind of a little bit of everything. Blueberry is well known, but for the first time ever going, okay, we're going to take a MRE, but it's only going to be for a very small portion of blueberry. Blueberry is still open. I can still add ounces at the same rate that we have, we believe, and at blueberry, and same with Scottie. But we're just kind of, all right, let's wrap it up. We're targeting, hopefully it's 1 million. Make no mistake, 1 million is not going to move the needle for 85% of the companies out there. People want to see 3-5 million. I understand that, but I think, we believe our situation is a lot different than everybody else's. And it's the economics of and the situation of where we are, what makes those ounces high grade. I'm a permanent mine, right? These things can move quicker than most. I can't tell you the exact timeline, but nor can anybody else when you deal with governments. But I can tell you nobody can do it quicker. So we're excited to get that out and just to the next stage. So yeah, a little bit of everything, but mostly focused on that MRE of the lowest hanging fruit. We're I'm very comfortable saying I'm targeting 2 million ounces now. We have other analysts, suggesting 3 million, but I'm very comfortable, that we're targeting 2 million ounces. We just got to just put the holes in the ground. And so we'll see what happens next year. Yeah.
No, exciting, of course, and you got the results to back it up as well. 8.78 grams over 9 meters, 12.2 over 3.47. That's from the first batch of results that you published just last week. They were from the blueberry contact zone. Just put them in perspective for us, Brad. What do they mean to you?
Well, so we're at the next level. So we've in the past did a 100-meter diamond pattern along that lithological contact. And so we're just putting holes. So we try and make those 50 meters apart. And, it's an 80-gram meter hole. And I think anything over 20 gram meters is good because we're connecting dots, we're connecting shapes. And so if it's going to go, we have so many 100-gram meter holes, but they're so far apart. So even if it's ore in between those two pierce points, this is great because it's going to add to this MRE, of which, I'm holding my breath. So I think they're great. Anytime, anything over 20 gram meters, I'm quite happy because it's going to go into ore, right? Or potentially ore. I mean, we're a couple months before I'm allowed. John Williamson on my board says, don't say ore, right? He's kind of right.
Air brackets or whatever they're called, right?
Sure. So, but I mean, we're going to get to that stage. And like I say, we have no illusions that, 1 million ounces. No, but when you look at how cheap we did it for, I think, and we can continue on. I'm an investor. It would make me, it's something I would take note of. So
yeah, I know we've talked about this before, but maybe just to catch up our audience here real quick to put everybody on the same level. Metallurgy, it's extremely important to be economic. Catch us up on the results, just to put it into perspective for us, so we don't have to wonder whether whatever you're putting out is actually economic to get out of the ground here, Brett.
Sure. So we've done the metallurgy. First off, no refractory ore within our deposit, and we didn't know the answers to this. No one asked us to do the metallurgy, but we are both the blueberry Scottie are compatible with both the Brucejack mill, which is north of me, which is a gravity flotation circuit, and also with the CIL plant, which is SCOT's plant, which is just 20 kilometers down the road. So the metallurgy checks out. That's questions that need to be answered. And so we've checked that out. So it's good. And then in the past, there was a 50,000 ton bulk sample that went through the Ascot mill. It was called Westman at the time. So we just know that we're compatible, but we just did these studies. So when people ask us, so yeah, we know we're compatible. We're not in deals with either of those companies at this stage, but it's just good to know that, there's two mills. Neither of them have long mine lives, and Ascot, we all know, has had, a few issues, but it sure seems that they're working that out. We're happy for them, and when the time's right, then we can start talking of if there are synergies. But the one thing I can say that surprised us, because when I bought the blueberry, I just assumed it was paratype pyrite, high grade, just like the Scottie ounces or vein sets. And what we've, Thomas redefined a few things. So it's bulk tonnage. Like, it starts right at surface. And so that bulk tonnage could be very important for our neighbor to the south, because we could, at the end of the day, it's just easy ore, right? Or I'm not allowed to say ore, but
Or.
Or.
You mentioned a few things, and I'm trying to be smarter than maybe for my own good here, and trying to connect the dots. But you've hired Kevin Jennings the other day, and you've announced that, I think, in September, not too long ago. You mentioned a couple things, and I've wrote down one sentence that in his bio, or like one of the reasons you've engaged him, is strategic corporate transactions. And maybe tell us a bit about the role of Kevin Jennings, and who's Kevin Jennings, and why'd you hire him as an advisor?
Sure. So Kevin Jennings found us. We didn't find Kevin Jennings. And in his past life, I think the biggest nameplate he was a CFO Barrick Africa, and did the IPO for that unit. But that was a few years back. He's kind of been retired for a long, I'm going to get this wrong, 6-7 years now. He's younger than I am, but he's been extremely successful. He is basically he's a financial guy. He's a CFO, but he basically can do, much like Thomas can tell you all about geology, Kevin can tell you exactly, the power costs and what's ore, what's not, and the economics of it. So to have him come on and go, okay, we're at this next level. This is taking a lot longer for us and all the other companies. But he's more from a financial point of view on turning rocks into dollars. That's his specialty. He's really, unless you're a big guy in the C-suite, they know who he is. We've gotten a lot of feedback from those bigger companies. The retail company community wouldn't know who he is, but that role is literally we're going off to the next stage and going, okay, how much are rocks worth? How can you turn rocks into dollars? And so we had to bring him on because we want to include him in some of these bigger meetings that we're going into. And as by accident, and we didn't know, and we're like, oh, geez, Kev. Like, okay, we're going to put you on, but we have to disclose how many shares you own. And he goes, oh, I own 10.04. He thought he was under 9.9, so he might get a little fine. And it was just, he's been buying in the market for a few years. So no private placements. He owns 30 million shares. I put a little bit into private placements, but it would be a couple $100,000. So the guy's in for 5 million.
Oh, nothing. Plus.
Yeah. And really, it's just great for us to walk in because, our next raise, he can walk in and no one's going to, there's very few people in the world who can do what he does. There's lots of guys, but I mean, it's a small group that, are telling big companies what to do. He's been a contract restructurer. I think the last one that everyone knows about, he kind of went in there to restructure Pomero. And I think he's done a little job for Centerra outside of North America where he just restructures things. Not that we need a restructuring, but the next level of investors that we're talking to is we just want to talk economics. And that's why we're rushing out the MRE. You never heard me say it before, but I can't talk about economics until I can put a number to what we have. So that's going to be his role. And the larger people in this business have recognized that completely. So it's neat. We'll see how it goes.
While we're on the corporate discussion topic here, Brad, I have to ask you, SCOT ran into a bit of a predicament. I think everybody's been following that. But how has that changed your business plan? Like, they're direct neighbors. They're one of the two mills in your neighborhood. Has that changed your business plan at all over at Scottie?
It really hasn't. It might accelerate things. How we perceive things may or may not happen. But no, we've always, of course, we've always thought, we just keep our head down, keep drilling. That mill is going to turn on. We've always believed, because the premier refurb is about 2,500 ton a day mill. If they're just going after underground faces, it's difficult to fill a 2,500 ton a day mill. So that hasn't changed. It's no secret. We're in no discussions with Derek. We feel, we've had a front row seat. We've been working. I mean, I was actually running Scottie before Derek White came in. It was still John Toffin running Ascot at the time. So no, I mean, we feel bad, right? I mean, I've watched him. He's worked hard. Yeah, they've got a few hiccups here and there, and like, not a few. I mean, it's been difficult for him, but we just need it. It's good for the industry. That mill turns, and from my estimation, you couldn't build it for $1 billion if it was a greenfield site. But what we can see is accelerating things. Things are happening right now, and then good business will just happen, right? Like I say, I'm not suggesting. I mean, I could be standalone, and I have Newmont. How much does it cost for Newmont to find 1 million ounces in the Golden Triangle, and then maybe just take that number and start with what Scottie's worth? It's certainly worth more than $50 million that the public can buy it in the market for right now. And the possibilities with Ascot is, we got to let them get on even keel. We're hoping the best for them, and I do believe they will. I mean, obviously, I get everybody's opinion on it. And what I found interesting is everybody's opinion is so different, and more importantly, different than ours. And like I say, so we are happy that it looks like they're going to get this lifeline. It's not closed yet, right? And it's kind of, you got to read through it all, right? Because there's lending and it's dependent on equity. But I suspect the people who did the BMO bot deal a couple months ago will be the people that populate this next financing, because they have to protect their money. And they're very intelligent groups that have been putting that money into it. They know that. I mean, the mill turns. There's nothing wrong with the mill. They've had every curveball they could had thrown at them, but no matter what, that mill turns. And so we'll just keep our head down and, let's come out with a resource and, let's just keep drilling holes. Eventually, when the market allows these things to happen, I believe we'll be recognized and be valued at whatever it is we're supposed to be valued, which is not 50 million. Yeah. That's my take on it. And I haven't lost any enthusiasm. And I think there's a light at the end of the tunnel. It's not a train, and we're not going to wait another 2-3 years to see what shakes out there. And, what's, from an investor's point of view, not all ounces are the same, but we're not going to go do a master class here. But what is a high grade ounce of gold worth in the ground, ready, accessible in the Golden Triangle right now? That's the only answer anyone has to, the only question anyone has to ask, and they can answer it for themselves. I have my opinions, and it's certainly a lot more. The standard as well, $75 an ounce in the ground is what everyone gets paid. But I heard that when gold was $1,100, like that number's never changed, and that's a U.S. number, so that's still 100 Canadian, right? Which would you can see the value that we may or may not have. I mean, I haven't published a resource, but a lot of people have modeled this.
Upcoming catalyst, of course, drill results. Brad, what's the lab turnaround time these days, and how do you plan to publish those results?
So catalysts are, we put out news last week. I probably could have put it out a week earlier, but it wasn't something so eye-popping. I just really needed Ascot. My news came out 2 days after Ascot. So no matter what I put out, everyone's kind of painting me. So there's a lot more to come, and I'm not worried about my results. The labs seem to be worse than they were last few years to me, but it doesn't matter. We've got results coming in, so you're going to see a lot more consistent from us here in the next 6 to 8 weeks.
No, fantastic, awesome. No, Brad, I wish you all the best. I'll see you here in Germany in next week. 10 days, yeah. We'll get to spend some time together. I'm looking forward to that, Brad. And in the meantime, all the best out there, and we'll catch up soon. And to everybody else, thank you so much for tuning in here to the Gold Newsletter, to this company update. Like, we've had Brad on a number of times, but it was long overdue that we caught up after the summer, see what they've been up to. They put out some interesting results, and of course, the big highlight will be the mineral resource estimate that'll be coming out, as Brad said, by the end of Q1, early Q2. My guess is PDAC. Personally, don't put a gun to my head or anything, but I think it's PDAC. So we'll find out, but it's looking promising, and thank you so much. Make sure to hit that like and subscribe button, leave a comment down below so more investors like yourself will be able to see this interview. Thank you so much for tuning in. We'll be back with lots more here on the Gold Newsletter channel. Thank you.